Main Street Asset Management CIO Erin Gibbs is here. Erin, always great to see you, and great to see you in the studio as well. Your reaction to the choppy trading that we're seeing as we kick off August?
Well, there are definitely some conflicting indicators out there. We talk about the yield curve inversion that's become a little steeper. So there are definitely some fears around having a recession. On the other hand, we are having a pretty good earnings season. And a lot of these up days are off of companies really having big beats and helping the market. But overall, we're definitely in a risk-on scenario, sort of following the July trend. The beaten up stocks, the tech stocks, your growth stocks are looking more attractive to investors. And that's what's really driving these markets. It's not your value, it's not your energy like we saw for earlier in the year. It's really the riskier growth stocks.
Let me pick up where I left off with Mitch in the last hour, because he was talking about, next third quarter, fourth quarter earnings, right? And that might be a place where we see a little bit of a pitfall. And my question to you is this, because I've been covering Wall Street for a long time, and when Wall Street brings its estimates down, as long as you meet or beat, even if it's on a lower estimate, then people are generally fine with it. So will we see a market reaction to lower earnings, which really tell us that the economy is slowing down in a real way, if Wall Street analysts just bring their estimates down?
Right, and that's sort of one of the conflicting signs. And just so for the second half of the year, earnings growth came from about 10% a month ago, and it's now down to 6% growth. So that's almost cutting your growth estimates in half.
Yeah.
And it's surprising because during this earnings season, most of the markets have been up. So clearly they're just happy that they're beating second quarter, which is in the past, even though the future is looking a little less rosy. So for me, look, I think it's great that sentiment is shifting. The VIX has come down. People seem more confident. And yeah, they're going to have lower hurdles going down as these estimates are plummeting. But at the same time, I'm still very cautious. I'm not going to say it's the end of the bear market, because we are seeing now growth being below inflation.
Right. And that's a huge concern. Wages aren't moving up. What do you think the Fed is going to do with respect to, I think part of the optimism we're seeing in the market today is like, okay, well, market's expecting to see a slowdown, so is the Fed, so he's not going to be so aggressive. We thought there was a chance for a 1-point hike this last time. He stuck with the 75. Some people are saying next time he's not even going to necessarily do the 75. And so that bad news, good news thing that the market always does, thinking that, as long as rates stay lower, we'll be okay.
Right. And it's really about the Fed, exactly, and that's why we see sort of these bets on whether it's going to be 75 or 50 on the next hike. And again, that's not going to happen in August. We've got all the way until September.
Right, they get a little break.
You get a 1-month break. So I think that's part of the optimism, is that by September, if we continue to have this inflation, 2 more months of basically more